So, what if money wasn't just a number sitting in an account? What if it could actually follow instructions all on its own? We're about to dive into a huge shift where money becomes more than just a way to buy things. It becomes something we can program with its own logic. And that brings us to this really powerful question. What if your money could literally think for itself? I mean, imagine it knew exactly when to pay your bills or who was allowed to spend it, and you didn't have to lift a finger. This right here is the core idea behind programmable money.
All right, first up, from static to smart. In this section, we're going to see how Ethereum's big innovation is turning our currency from this passive thing into an active, dynamic tool.
Just think for a second about how digital money works today. Whether it's in your bank account or some payment app, it just kind of sits there. It's static. It waits for you to tell it what to do. You can send it, you can receive it, but that's about it. It doesn't do anything on its own. But this is where Ethereum completely changes the game. Instead of having the rules live on some bank server somewhere, Ethereum bakes the logic directly into the money itself. The value and the rules become one and the same, making the currency dynamic and, well, truly programmable. Okay, so this idea of money with built-in logic sounds cool, but what does it actually look like? Let's put it side by side with the traditional financial system to really see the difference. And wow, when you see it like this, the difference is night and day. In traditional finance, the logic, like your monthly rent payment, sits on a bank's server, totally separate from the actual money. But with Ethereum, the logic and the value are fused together inside what's called a smart contract. The money isn't just being told what to do by a program, it is the program. So here's a perfect if-then example of this in action. A rule like this isn't an instruction you send to a bank anymore. It's a condition that's baked right into the money. The funds themselves become an active participant, executing the payment automatically the second that condition is met. No middleman, no delays. Now, this fusion of logic and value gives us something incredibly powerful. It's called a coherence guarantee. And all that really means is that because the rules and the money are a single thing, they can never, ever fall out of sync. They are always in perfect agreement, guaranteed. And here's why that matters so much in the real world. In our current systems, a payment might still go through even if a condition fails, which creates these huge, costly messes that someone has to manually fix. With programmable money, nope. If any piece of the puzzle isn't right, the transaction just fails. It doesn't happen. Can you imagine the amount of money and headaches that could save businesses? But how does this all actually work under the hood? What's the magic making it all possible? Well, that brings us to the engine that powers everything. The Ethereum Virtual Machine, or EVM for short. Probably the easiest way to wrap your head around the EVM is to think of it as one single global computer. But it's decentralized, which just means that thousands of computers all around the world are running an identical copy of it. Together, they all maintain one single consistent version of the truth. This is the foundation that makes programmable money possible. So let's quickly walk through how it works. First, a developer writes the smart contract code. Second, that code gets compiled or translated into a language the EVM can understand. Third, and this is the really important part, every single computer or node on the network runs that exact same code. And finally, they all have to reach a consensus. They have to agree on the outcome before the blockchain is updated. This whole process is what makes it so incredibly secure and trustworthy. Okay, so we've covered the what and the how. Now it's time for the so what. How is this technology actually being used today to build totally new financial tools? We're going to look at 3 fantastic real-world examples: automated escrow, scheduled and conditional payments, and something called controlled spending. Let's break them down. First up, automated escrow. You know how normally you have to pay a lawyer or a bank to act as a trusted third party to hold money until a deal is done? Well, with a smart contract, the code is the trusted third party. It holds the funds and it only releases them when it receives a verifiable signal, like a delivery confirmation. No middleman, no extra fees. Simple. Next, let's talk about scheduled and conditional payments. You could automate your company's entire payroll to pay everyone on a specific date, without fail. But you can get way more creative than that. Imagine programming a sales bonus that only pays out if the company's revenue target is hit. And that target is verified by a trusted external source of data. It's reliable, it's automatic, and it's tamper-proof.
And finally, controlled spending. This is where you can really see how specific you can get with the rules. For example, a parent could send their kid an allowance, but the money itself is programmed so it can only be spent at certain places, like the university bookstore or the campus cafeteria. The spending rules are literally embedded right into the funds. So, all of this leads us to a really exciting question for the future. What's the biggest, most profound change this could bring to our financial system? Could we actually be looking at a future with far, far fewer errors?
Look, if you remember just one thing from all of this, it should be the Coherence Guarantee. That promise of a perfect, unbreakable link between the rules and the money is what could absolutely revolutionize finance. It points to a future that's more reliable, less risky, and dramatically more efficient. And that just leaves us with one final thought. Now that you've seen what's possible, if you could sit down and program money with any set of rules you wanted, what is the very first problem you would try to solve?